a nice demeanor, Michael. Great to be able to talk to you again, since we've gone through, you know, kind of like a paradigm shift through the election. And,
Yeah,
I follow your work and see you're bearish in the video. We're on the same page on a few things. So,
yeah.
where we at in December? Has there ever been a big break or a market top posted in December
I don't
historically?
know. I remember
I
2018. That was pretty
oh
nasty.
oh yeah, that's when your cousin Kramer was went into that rant. They do not know what they're doing.
No,
The
that was
rant on
2008.
oh my God. Okay. 18. What
18, that
re,
was when Mnuchin was calling around to the banks to make sure they had enough liquidity and everyone was making fun of him on
oh
Twitter.
all right.
That was when
Oh
we had that fall of 2018 decline. It was about a 20% drop that we had in the market. And I remember that what was specific about that was that you had Jay, was one of Jay Powell. He had just really been the Fed chair for a few months at that point,
okay, I
and
remember
he's
that.
up there talking about how we're not even close to neutral, and the market's just
Yeah.
dropping like a stone.
Yeah,
So
and then he was singing Kumbaya with what Bernanke and Yellen got together
yeah,
with him and flipped him.
yeah,
They put him under the light, man. Interrogated the guy. What do you do in telling the public the truth, right?
yeah. No, you can't burst the unrealistic bubble.
All right, so you look at some real interesting indicators to give you a feel for what's happening under the surface of the markets, and
Yeah.
I love that about your work that you're not talking about the obvious stuff we all talk about. So, what's top of mind for you today, Mike?
Well, as you were talking about already, I've been watching the Euro. I think there's a lot of interesting things going on there,
Yeah,
especially with the France development over the weekend.
yeah,
Obviously, the yen is probably the most top of mind right now with what's looks like we're probably going to get a December rate hike out of the BOJ. Um, it's funny because a lot of people are sort of dismissing the yen importance and the unwind of the yen carry trade, but I don't really I'm not assuming that that's not going to be an issue. I think that it may actually still be an issue, especially when you look at the performance of the NASDAQ versus some of these other currency pairs like the CADJPY, and you overlay that with the NASDAQ, it's been actually tracking it pretty closely. So, um,
interesting.
I can share my screen and share stuff.
Yeah, go ahead. Yeah,
I
go
know we
ahead,
like to
Michael.
do that usually.
No, I prefer when my guests show me your stuff. Okay, so the CAD yen, and you also use USD CAD as a risk currency as well.
Yeah,
Um,
so let me
Go ahead.
let's ignore this stuff. Um, so if we do USD CAD you can see that's really broken down quite a bit. Obviously, Canada not really having the greatest is having a little bit of economic struggles right now. And when you overlay the Nasdaq futures over it, um, you can
Yeah,
see that they've divert in terms of price. This is certainly
yeah,
outperformed, but if you bring it in closer, I mean, you can clearly see that they've still been
yeah,
somewhat
yeah,
trading together. And so I'm just watching this because there's clearly been a divergence
yeah.
lower at
Okay.
this point, where the Nasdaq hasn't really yet diverged. And if you watch the MXN JPY as well, that's also something that's had a relationship in the past that is clearly showing signs of divergence, and we haven't seen it yet. So, I try to look at a lot of different things, and the USD CAD has really been a great indicator in the past when you compare it to, something like the Nasdaq or the S&P. For whatever reason, it's kind of broken down more recently, but you
Yeah,
can clearly see that tops in the USD CAD has related to major bottoms in the S&P. And you can also make a case that some of the major bottoms in the S&P have come when there have been, I'm sorry, major tops in the S&P have come at times when you've had these bottoms in the USD CAD, such as in here and in here. So it's kind of the relationship has broken down more recently. Not really 100% certain why. I'm thinking it has something to do with the VIX. Um, Implied volatility also has a strong relationship with the VIX, with the USD CAD over time. So they tend to follow each other pretty closely.
Yeah.
Again, there's been a big divergence here. I think this might have had to do with the election and such. So
Yeah. Could that be, Katie Stockton called the move after the election a buying climax.
yeah, I
So,
mean that's possible. And
yeah,
I don't. I mean, look, I think the last time I was on the show was in July, and you had asked me if what I thought about the market, and
yeah,
I said I thought the Nasdaq may have topped. I mean, I don't. I mean, it looks like it may have actually put in some sort of peak here, and I think it's going to largely depend on a couple of things. I mean, I think rates are obviously a driving factor at this point. I'm watching the 10-year very closely right now because the one thing that I've noticed more recently is that we've seen a major uptick in inflation pricing. So we've seen, zero coupon, 2-year zero coupon swaps move up quite a bit since the Fed started cutting rates. I mean, this is a very
yeah,
big move. And
yeah,
so, if the
it
market's
is.
going to be pricing in higher, and you can see where we are right now, we're sort of at a
Right.
major, breakout point where if we're going to break out, this is going to lead to potentially much higher inflation expectations. And basically,
So
if you just,
maybe the Fed doesn't cut, Mike?
yeah, I mean, then there's your dollar, right? Your dollar is just trading with inflation swaps, basically. So yeah, I mean, it's possible that you were talking about the job report coming up, and
Yeah,
we're looking for 4.1%, 200,000. I mean, it could be stronger than that because we've seen a lot of regional data from the Fed. I'm curious to see what today's ISM report will be because a lot of regional PMI data points we've seen from the Fed have been very strong in employment specifically. So, my big thing here is that again, I've been bearish on the market because of many different reasons, and that's obviously been wrong. Uh, some of those reasons have been because of stronger currents, stronger dollar, fewer rate cuts, higher rates overall. And for the most part, that's played out. But the equity market has really not responded. But going back to your December of 2018 analog, right, where you said has anything ever broken down in 2018, and I call it the 2018 ghost because there's something that is very similar right now that is taking place that took place in 2018. This is a chart. It shows you the margin balance levels versus the reserve balances held at the Fed. The black line is reserve balances. The green line is the margin balances, and the orange line is the S&P. So
yeah,
you can clearly see in this period of time, reserve balances were dropping materially while margin balances basically peaked and weren't expanding anymore, but you still had an S&P 500 rising.
yeah.
And lo and behold, that's exactly what's happening now, where you have reserve balances dropping, margin balances no longer expanding, and S&P 500 continuing to rise. So that kind of suggests to me that you're not really, the market's rising somehow, but it's not rising because there's more liquidity coming into the marketplace. And that may
Could
be,
it still just be short squeezing?
it could
Still,
be, I'm actually thinking it's more related to leverage. Perhaps we're not really seeing margin expanding, but somehow people are able to expand their leverage potentially through options. And that may be driving the market more, or maybe futures, because when I looked at this over the weekend, uh, let me see if this is it or not.
because
Uh,
I did see that the COT has commercials the most short they've been in a long time.
yeah, so
Isn't
this
that
is the
true?
dealers. This is
Okay.
dealers. Um, and you can see that dealers are the most short they've ever been
Ever.
ever, right, in terms of
That's a big
gross.
word.
And then in
Yeah.
net terms, they haven't been this short since 2008. I mean, dealers are
Okay.
basically just taking the other side of the asset managers and the non-reportables, right? Or the
Yeah.
levered funds. And basically when you think about asset managers are as, bullish on the market as they've ever been. Let me just see if I can find that one.
What, like the greedometer?
No, when you look at positioning,
Oh,
uh, I was just doing it over the weekend.
it's okay.
Oh, here, maybe this one's it. So those are if it loads, those are some of the things that no, this isn't it. But those are some of the things I'm looking at more recently. So I don't really rule out the fact that, you could see a December pullback. I know that seasonally this is a strong time of the year.
Maybe that's the reason, is that everyone thinks that it's a layup into the end of the year.
Right. And, last year was sort of odd because, I mean, when we think about seasonality, you typically think about, okay, November, December, best time of the year. Maybe we'll add, 1 or 2% or 3%, not 10%, right?
Yeah,
So, um,
yeah,
when you look at even the technical setup of the S&P, we've been, in this rising wedge really since, call it
yeah.
August,
August. Yeah,
and we've been testing it, and we really haven't been able to break out to the upside. And right now we've just kind of come back again to it. So, and then when you look at the Nasdaq, it's a similar look. I mean, it looked like we had a classic, rising wedge with throw over.
right,
Then it looked like we were
right,
going to bust through the bottom, and we
right.
didn't.
Yeah,
But, if you use Nvidia as a leading indicator, it
yeah.
has,
It did. Yeah,
no
yep.
doubt,
That
right?
was really ugly action
And it
after
did it
the.
really on everything you want to see, rising
Yeah,
volume, falling
yeah,
momentum. You
right.
got back to, support on Friday, 139.5, and that's where you failed. So I mean, when you start looking at that, and then the SMH looks really ugly too,
Yeah.
with sort of a bearish flag or bear pennant in it. Um,
Google. How about Google? Doesn't look too good either. That's one of my shorts.
oh really? I've owned Google for years, but
All right.
um, yeah, I mean, Google, it doesn't look, I haven't really looked at this
I
closely.
mean, it's a failing rally up at that 181 level when the whole
Yeah,
market
sure.
was making new highs.
Sure.
Yeah.
I get that. And then you came
I
back down, you fell through support, a
yeah.
pretty strong volume tue.
Looking
Meta
for
obviously is another one that's
130.
important. Yeah. And Meta is
I'm
obviously another important one, right? Because
yeah.
Meta has
Yeah.
been one of the big winners. And so
Yeah.
it doesn't look great. Um, I mean, so if you think about it from a standpoint of, if you get, the stronger, if you get that move higher in rates, um, and you get uh, and you get the higher rates, you get the stronger dollar. I mean, you got to think that financial conditions are going to start to tighten, and typically, you haven't, you can see financial conditions right now are really easy, and they haven't been this easy since 2021. And this was when the rally really started in earnest, right? Which was in October of 23. And
Yeah.
and this all has to do with, basically, credit spreads contracting. And credit spreads are basically also at levels that are historically,
Yeah.
low.
The ultimate complacency, the tightness of
Right. I mean,
credit
if you look at the
spreads.
Bloomberg high yield OAS, I mean, this is a measure that goes back to the early 90s, and you have, basically we're at 2007 levels when you look at it from this perspective, right?
Yeah.
So I mean, there you are, basically
Yeah.
at, some of the lowest, tightest spreads you've seen since the GFC. And then the other thing that I thought was really interesting over the weekend was I was looking at realized vol, and 10-day realized vol is under 5. So basically that implies that, if you take the rule of 16, which is basically, 200, the square root of 252, if you take the square root of 16, it basically, if you take the rule of 16 and you add and you work it off of a 5 vol, that basically means that if the S&P 500 moves more than 31 basis points on any given day, up or down, realized volatility is going to start rising again. And once realized volatility starts rising again, you're going to see implied volatility reset. And this comes at a time when you have 1 month implied correlations basically at some of their lowest levels in years, and that just means the market is not correlated, right? The implied
Yeah.
volatility of the market and its components are not correlated, and so once you start getting into a situation where you have really low levels of realized volatility, really low implied correlations, really tight credit spreads, dealer positioning,
It
um,
can't get any better,
right.
right? And
I mean,
so
you can have another July type of moment, but, and then you factor that into, maybe a Fed doesn't rate cut. Maybe the Fed signals its neutral rate's not, closer to 3%. If you look at Fed fund futures, I mean, they're telling you that neutral is somewhere around 3.5%.
yeah,
And, that makes it, so that, how is, in other words, like, financial conditions have nowhere to go but higher, right? I mean, I don't know what this blip is in here, but if you draw the curve out and you just, assume there's a normal arc, you're talking about a 3.7 and this is 3.5. So somewhere between 3.5 to 3.75, you're talking about a Fed, a neutral rate on the economy, right? And
yeah,
then if you take, and I'm just rambling, I'm sorry. But then if you
good
take
stuff.
the 10-year and you subtract the 10-year from the Fed fund futures or the Fed funds rate, we typically peak at 300 basis points. So how low is the 10-year going to go from here in a 5% nominal GDP world? I
Yeah.
mean, if my view, you should have a 10-year closer to 6% as long as we don't have a recession.
Okay. So that's a great segue. The bond rally we had on the appointment by President-elect, what's his name, Bessemer.
That's it.
Um, okay, and bonds rallied really on that,
Right.
not on data. Is that rally going to hold? Because it was on the verge of really capitulating. And I
Well,
look at it, I look at the weekly, like in TLT,
right.
and it doesn't look complete to me anymore that we could actually attack the 80 level again.
Yeah, and I
And
agree. I mean, look at the curve, right? I mean,
yeah,
Bessent is a macro fund manager. Uh, and he's looking at the same, I mean, so look at it like this. He was a Soros guy and he worked for he also worked with what's his name, Druckenmiller.
who's
What is Druckenmiller's position on rates? He's short rates because
yeah,
he thinks they should be much higher.
right,
So what if Bessent's view also is that rates should be much higher?
yeah,
How do we know that he doesn't think it's a really good time right now to issue a lot of duration with a 10-year at 430 or 410?
right,
Because
yeah,
he looks at the curve and he says, "Oh, I can issue 10 years at 430. Like my models show me that the 10-year should be 6." I have
yeah.
no
What about
idea.
yeah, yeah, yeah. So how do you think he's going to get along with President-elect Trump? How long does this guy last?
I don't know.
I know. Anyway,
Yeah, I
so
mean, actually, I was surprised Mnuchin was the only one that really made it all 4 years with him the first time around, right? So I was
yeah,
surprised he didn't bring Mnuchin back, but I guess Mnuchin's just done.
yeah. All right.
But if he, who knows? Maybe he lasts. Maybe he'll last the 4 years. I don't know. I think, I know Lutnick wanted the position, so who knows?
He wanted every position.
Yeah, I know.
Hey, Mike, let me ask you, what do you think about the fact that Paul is
Oh,
now pretty much on go all
who?
right, go ahead. Go ahead.
Oh, I'm sorry. Just before you go, because I know we talked about this the last time, the COSPI and
Yeah,
the IWM.
yeah,
I have this little paper trading thing I'm trying. So just ignore that. And you take the CADJPY and you take the IWM, or you take the CADJPY and you take the Russell 2000.
Yeah.
Um, Remember we talked about this the
Yeah.
last time. Look at this
Yeah.
divergence.
Wow.
Look at that.
Yeah. Yeah.
I mean, if
There,
you're, I mean, it was funny because I was telling everyone in July that, to be careful with the small caps because the CADJPY was going the wrong way while the Russell was rallying, and people were, I was doing it in my YouTube videos and I was
yeah.
getting really heckled. They went away
Yeah.
really quickly.
Yeah. Yeah. Yeah.
Well,
Well,
look at that.
I wanted to ask you, Paul is pretty much unfettered now. He's not seeking another term. It's got a year left. I don't think that he's crazy about who won the election. Do you think that he wants his legacy to be that he stood firm in front of inflation uh, and even risk a recession, or just go along with lower rates, which will most likely be uh, demanded by the administration? Which way do you think he's going to go? He doesn't have any pressure on him to do
Yeah,
anything anyone wants him to do.
right. Yeah, I mean, I think the biggest risk he runs right now um, is that
Letting
of inflation
inflation.
coming back,
Yeah.
and I don't think he wants to be remembered as Arthur Burns. Uh,
Okay.
and
That's not bullish the markets, because the way the market is currently uh, the way it's currently, it's wrong footed if that's his mission, and it's not
yeah,
going to be employment.
and you can see basically when you look, this chart takes 2-year inflation swaps and it minuses the Fed funds rate,
Yeah.
and what it shows you is that even though the Fed is cut by 75 basis points, policy
Yeah.
is actually eased by 180 basis points because you had the 75 basis point rate cut and you had basically an 80 basis point rise in inflation expectations.
Yeah.
So policy is actually a lot looser today than where it was when the Fed started cutting rates by quite a bit. And the question becomes, does inflation expectations continue to rise? And I tweeted this out yesterday as sort of like a joke, but it's a valid point. This number on Friday, this University of Michigan number, could be a
Yeah.
very important number because it came in at 3.2%
Yeah.
last month. That was the
Highest
highest
ever.
value in the series.
Yeah.
And the interesting thing is, if you go back to 1970, you'll see that this value here at 3.2% hasn't really occurred very many times since 1995. And if this month this number gets over 3.2%, I think that's a really big deal because that's a sign that maybe consumer inflation expectations are now becoming de-anchored.
Okay.
So I would
There's
I would really watch this very closely if you get a number above 3.2% and specifically how the market responds to it.
You did it again, Michael. Really a lot of interesting looks. I really enjoy talking to you every time you drop in because
Thank you.
I see things that I wouldn't normally look at myself. And Mike has a YouTube channel. He also, you can subscribe. What's the best way besides X at um, Michael Mott CM? Best way
So
for people to follow you.
So I've been really also focusing a lot on Substack right now.
Okay.
I've been posting a lot of notes there. I publish under Michael Kramer there or under the Market Chronicles on there. And I also have a YouTube channel called the Market Chronicles. I'm also in the process of starting another YouTube channel with George Noble called Beyond the Charts, where we're going to be doing more interview like type stuff. Um, and I'm also on Seeking Alpha under Mott Capital Management.
What are you doing copying me with the interview stuff, man?
Well, it's not. I wouldn't say it's copying, you know.
What would you call it?
What would I call it?
Yeah.
Oh,
Huh?
eh,
Is it an
it's not
original
really.
idea?
I'm not trying to copy you, Dale. I'm certainly not trying to take anything away from you.
No, you
You're a good
copycat.
guy.
You're a copycat with interviews. No, everyone did it. Shy girl, everyone. So
Yeah,
they say imitation's the highest form of
form of
flattery. But
flattery.
the
Yeah.
truth is, I'm trying to be like you now, Mike.
Oh,
So
really?
yeah, I want the same amount of views you're getting on YouTube, and I'm jealous.
It's hard. I've spent a lot of, you got to analyze the data. You got to look at those charts like you're
Uh,
analyzing a stock chart.
I know, but I tell you what, guys, pay attention to what Mike is saying. He's the first one to say when he's wrong, he's wrong. But some
Yeah, and I'm
things
wrong
that
a
can,
lot. So,
yeah, that we're all wrong a lot.
yeah.
But if we're managing risk, we don't have to be right all the time.
No, and I
So
think that's one of the biggest pieces that people miss with what I'm trying to present to them is
yeah,
that I'm trying to present the levels that are important and that matter, and that if they break,
yeah,
then that means you have more to go, which other direction that may be. And people tend to think that they seem to miss that point a lot. So
yeah.
it's an important
Well,
one to get.
that's why we're here is to help people avoid the landmines we have stepped on ourselves,
Of course.
right? And
Yeah.
Mike, I really appreciate your giving spirit of bringing your work here because I know you're a hardworking guy, and you spend hours and hours and hours looking to get that's your edge. And thanks for sharing your edge with us.
Not a problem. I enjoy it every time.
All right, Michael Kramer, everyone follow him at the minimum on X. Go check him out on Substack, and he should be included in your intelligence gathering, especially in this environment that we're in December. So it may end up being a December where the bulls end up with coal in their stocking. So be careful out there. Thank you, brother.
Thank you.
All right. That's going to be a wrap. Don't just count your pips, count your blessings. Could join the team in 15 minutes, and I'll see you for Turnaround Tuesday. Mike will be back with us next year. Adios, everyone. Everyone good? Everyone okay? And remember, you didn't miss the end, right? So if the BOJ does not tighten and the yen rally, US dollar yen rallies back towards 53, I'll be putting some back out there. That's a wrap, everyone. Have a good one. Good hunting.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.